Every investor dreams, harbors that secret wish of finding that one stock, the ultimate investment, the golden ticket. A stock that defies expectations, a company poised for explosive growth that could change their financial future, catapulting them towards their goals and aspirations. The kind of stock that legends are made of. Today, that stock is NVIDIA, the semiconductor and software design giant. It's the name on everyone's lips, dominating headlines and fueling conversations across the financial world. NVIDIA powers everything from gaming, with its cutting-edge graphics cards that deliver unparalleled visual experiences, to the AI revolution, providing the essential hardware and software infrastructure for the next generation of artificial intelligence. They are at the forefront of innovation. But does that make it the best stock to own? Is the hype justified, or is there more to the story? We're going to break down NVIDIA from every angle, dissecting its business model, analyzing its performance, and evaluating its future potential. We'll delve into its financials, scrutinizing its revenue growth, profitability, and cash flow. We'll examine the technicals, looking at price trends, trading volume, and key indicators. We'll gauge market sentiment, assessing investor confidence and media coverage, and we'll analyze the competition, identifying NVIDIA's rivals, and evaluating its competitive advantages. The goal isn't to hype you up, to blindly follow the crowd, but to give you a clear, honest look at the opportunities and risks, empowering you to make informed decisions. By the end, you'll know if NVIDIA deserves a spot at the center of your portfolio as a core holding for long-term growth, or if it's just another overhyped tech giant destined for a correction. Let's dive in and uncover the truth behind the NVIDIA phenomenon. To judge NVIDIA, we need the right tools. First, fundamental analysis looking at revenue, profits, and cash flow to see if the business is healthy. Second, technical analysis studying price charts and trading patterns to spot trends and momentum. Third, sentiment analysis gauging Wall Street ratings, news, and social media buzz to see how people feel about the stock. And finally, past performance, reviewing how the stock has done over the years for context. These four lenses give us a 360-degree view. Let's use them to see if NVIDIA is truly exceptional. Here's what we found. NVIDIA's financials are not just impressive, they're jaw-dropping, a testament to their strategic positioning and technological prowess. We're talking about a company that's not just participating in the AI revolution, but actively driving it. Its market capitalization ranks among the world's largest, placing it in the company of tech titans and industry giants. This isn't just about size, it's a reflection of massive investor confidence, a belief in NVIDIA's long-term vision, and its ability to execute on its ambitious goals. Investors are betting big on NVIDIA, and their confidence is clearly visible in the company's valuation. Earnings per share and profit margins are soaring to unprecedented heights, showcasing the company's ability to not only generate revenue, but also to convert that revenue into substantial profits. This efficiency is a key indicator of a well-managed and strategically focused organization. The numbers speak for themselves, painting a picture of robust financial health and operational excellence. This remarkable financial performance is thanks to relentless demand for its cutting-edge AI chips, the very engines that power the artificial intelligence revolution. These chips are the gold standard in the industry, sought after by companies and researchers alike who are pushing the boundaries of what's possible with AI. Revenue growth is explosive, a rocket ship trajectory that defies gravity and conventional expectations, sometimes reaching triple digits, a level of expansion that's rarely seen in established companies of this size. This kind of growth is a clear signal of NVIDIA's dominance in its key markets and its ability to capitalize on emerging opportunities. This growth is fueled by the insatiable appetite for all things AI, a boom that's transforming industries and reshaping the world as we know it. NVIDIA is at the epicenter of this revolution, providing the essential tools and technologies that are driving innovation across a wide range of sectors. The company generates huge cash flow, a torrent of money that provides it with unparalleled financial flexibility and strategic options. This allows it the power to invest aggressively in research and development, acquire promising startups, and generously reward shareholders through dividends and stock buybacks. Return on equity is top tier, a key metric that demonstrates how effectively the company is using shareholder investments to generate profits. This impressive ROE shows that management knows exactly how to create value and deliver exceptional returns for its investors. In short, NVIDIA is a cash machine, a financial powerhouse with enviable financial health and a seemingly limitless potential for growth. It's a company that's firing on all cylinders, and its financial performance reflects that. But numbers alone, as impressive as they are, don't tell the whole story. There's more to NVIDIA's success than just spreadsheets and financial statements. Let's delve deeper and see what the charts say about NVIDIA's future prospects and its position in the ever-evolving tech landscape. NVIDIA's stock chart is a textbook uptrend, higher highs, higher lows, and relentless momentum. High trading volume confirms strong demand, with big investors piling in. The stock consistently trades above key moving averages, signaling a powerful long-term trend. But technicals also flash warnings. Indicators like RSI sometimes show the stock is overbought. That means corrections can happen fast, even in a strong uptrend. The takeaway? Momentum is on NVIDIA's side, but volatility is always lurking. Don't mistake a rocket ride for a smooth one. Now, let's check the market's mood. Wall Street is overwhelmingly bullish on NVIDIA buy ratings, and rising price targets are everywhere. Analysts see explosive AI growth and believe the stock has more room to run. Media coverage is constant, and CEO Jensen Huang is a tech celebrity. Social media buzz is off the charts, with retail investors piling in, but with so much optimism, expectations are sky high. Any disappointment could trigger a sharp sell-off. A few contrarians warn of a bubble, but they're in the minority. Sentiment is a double-edged sword, fuel for rallies, but also for corrections. 10 years ago, NVIDIA was a gaming chip company. Now it's the face of AI. Early investors saw life-changing returns, far outpacing the S&P 500. The company's pivot to AI supercharged its growth and reputation. In the last 5 years, revenue and profits exploded, and the stock price followed. This track record inspires confidence, but also sets a high bar for the future. As NVIDIA grows, it gets harder to keep up that pace. Past success is impressive, but future growth is what matters now. Can NVIDIA keep delivering? That's the real question. In the dynamic world of tech and innovation, NVIDIA has emerged as a significant player. But how does NVIDIA stack up when we place it side by side with some of the most established and influential companies in the market? Let's delve into a comparative analysis, examining NVIDIA's position relative to these market giants. We're talking about going up against giants like Microsoft, a behemoth in the software and cloud computing space, a company that has its hands in everything from operating systems to enterprise solutions. Apple, the consumer tech titan, renowned for its sleek devices and loyal customer base, a brand synonymous with innovation and design. Thermo Fisher, a leader in scientific instrumentation and laboratory services, a company that quietly powers research and development across the globe. And Nike, the undisputed king of athletic apparel and footwear, a brand that transcends sports and permeates popular culture. Microsoft and Apple are diversified powerhouses. Their strength lies in their ability to generate revenue from a multitude of sources, weathering economic storms and adapting to changing market conditions. They have their hands in cloud services, software development, computer hardware, and a vast array of business services. This diversification provides a safety net, a buffer against volatility. NVIDIA, on the other hand, is a pure play. Their focus is laser-locked on AI and accelerated computing. They are betting big on the future of artificial intelligence and its transformative potential. This concentrated approach comes with higher risk, but also the potential for higher reward. If AI demand slows, even temporarily, NVIDIA feels it more acutely. The impact is far greater than it would be on its diversified rivals, who can rely on other revenue streams to cushion the blow. Thermo Fisher offers steady, predictable growth, a recession-proof growth trajectory that appeals to investors seeking stability. But it doesn't offer NVIDIA's explosive upside potential, the chance for exponential gains that captivate the market. Nike is a global brand, a household name recognized in every corner of the world, but its growth is slower, more measured, and more cyclical, tied to consumer spending and seasonal trends. The choice: do you prioritize stability and diversification, a balanced approach to investment, or do you prefer a focused bet on AI's future, a high-stakes gamble with the potential for significant returns? NVIDIA's concentration is its strength. It allows them to move quickly, to innovate rapidly, and to capitalize on emerging opportunities in the AI space. But that same concentration is also its vulnerability, making it susceptible to market fluctuations and technological shifts. It's the speedboat, agile and quick, navigating a sea of ocean liners, massive vessels built to withstand any storm. But speedboats, as nimble as they are, can capsize in rough waters, leaving investors scrambling for safety. So, is NVIDIA the only stock you need? The case is strong. It's at the heart of the AI revolution, with visionary leadership and stellar financials. But the risks are real: sky-high valuation, fierce competition, industry cycles, and geopolitical threats. So much future growth is already priced in that any stumble could mean big losses. No matter how great the company, a one-stock portfolio is just too risky. Diversification protects you from the unknown. NVIDIA is a star, but it shouldn't be your whole universe. Let's wrap it up. NVIDIA is a phenomenal company and a worthy core holding for tech-focused investors. But great companies aren't always great stocks at any price. The higher the expectations, the thinner the margin for error. Diversification is your best defense against surprises. Decide how much risk you can handle, do your own research, and never bet it all on one stock. Use this analysis as a starting point, not the final word. Stay informed, stay diversified, and invest wisely. Thanks for watching. See you next time.